trade, and then as soon as you get in the trade, it doesn't just you don't start just making money automatically. Like as soon as you get in and you just green, 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 or you might be in a trade and you might go up like 10%, then you might pull back like 15%, or you might pull back a little bit, and then you get scared out of the trade, and then the trade will still go exactly where you know what I'm saying you kind of did your technicals and man, it went exactly where I thought it was gonna go, but it spooked you first. So when you get on a lower time frame, the lower you go and enter in on the trade, the more precise the entry can get if you already got permission or you already got clarity of the direction the stock is going in on a higher time frame. But when I talk about like a sequence, when you look at stuff that happens in sequence, you will start after you start kind of looking at your wolf chart, you will notice that a lot of times before you get these inverse arcs, sometimes you would get these candles that have these wicks at the bottom of it, where price will get sucked up, like price will drop down and be real bearish, and then you'll see price get sucked up, and then it creates this long wick on what used to be a red candle that was pushing all the way through here, and then you'll see it reverse up. And then after that, what you would end up seeing is a inverse arc, and then you will see the 12 cloud turn blue. Then you see price start pushing up like more aggressively, right? And so let's go look at some stuff that's very strong, like Dell, for example. And at one point, Dell was not strong, right? It was not the darling of the stock market like it is right now, but it was more so, you know, saying just kind of chilling, right? And you see how down here in this position on a daily time frame, it's we have the location looks good because we have this order block down here. So we had this consolidation, right? And then we have the candles break above the WTMA, which is this lime green, little skinny line right here, right? And so we have it break above that line, and then we see the 12 cloud turn blue, and then we see the uptrend form, right? And so you'll notice even on pullbacks, like right here, you see how Dell had this long pullback right here, and even though this inverse arc right here isn't like the best, it's flat, and then it does this little kind of like this double inverse arc, but it's flat right here, trying to make a decision. What I want you to pay attention to is the breadcrumb. When smart money enter in to positions, if they want to buy in calls, they're going to enter in on big red candles. I know, and so it take a while as a retail trader for your brain to kind of comprehend that. You know what I'm saying? Like you'll get in you when you're trying to get into calls, you're upset when price starts dropping. Oh my God, I want to get into calls and then price starts dropping. Well, the way smart money prepares to enter into a call position is they first will push down the price, and then in this big giant red counter, because they're always trying to hide their positioning, they're always trying to get into a stock position without the stock just going completely parabolic as they're trying to enter. So they want to enter in on a discount. So as price is getting pushed down toward a liquidity level, so they're trying to push down to where this fair value gap was. But as they push down, you will see when they enter, because on a big red candle, you will see this either they abide up and leave this wick, right? And even if you entered in on this 12 cloud, this inverse arc shows you that they're committed to the position to push it up. So I'm gonna try to find some lower time frame examples where we see better sweeps on the on price, or you see that push down and then uh and then price action gets into an arc. You just always want to kind of be looking for when you're getting a inverse arc, which is our early entry phase to get into a trade early. And so that's why the system is phase based. So we have early entry, which is saying that you really want your position to be as close to a support level as possible for two reasons. When you're getting inside of an inverse arc and it's near your 200 or it's near order block and stuff like that where their money is, you're entering your position as close as possible to where they actually accumulated the stock at, right? This alone, just having that GPS uh, knowledge in your brain, just really paying attention. Where am I at on the chart? Am I trying to play the stock right in the middle of the chart? or am I playing calls from support? Am I buying calls when I'm like in the middle of nowhere at the top of something without any kind of confirmation? Or am I playing it near where their positioning is? The closer you play near their positioning, the more protection you have to your position, if that makes sense. Like nobody can just come in here after if I get into a play and I got all this support under me on Dell, right? I got the 200 cloud, I got demand zone, I got order blocks, I got the VRVP is sitting down right under me, right? It's very hard for price to just come down here and rip down and drop, right? Now, on the contrary, not saying there's anything wrong because Dell is so bullish right now, but say if Dell starts slipping inside the WTMA, if you enter calls up here, it can very well keep going higher, but you are at a higher risk of a pullback in this location, if that makes sense. Like you're at all time highs, and even though it's in a bullish trend, and we're going to play calls on them if it makes sense, and they're getting fresh confirmations, and they're taking new legs up, and they're strong. It makes sense to play calls on, but I'm also saying the risk though to the downside is way more extreme than if you bought here at support, right? And so if you look at some of the stuff that I called out, I think like Oklo, even though they hadn't made like big moves yet, and I think some of them did like pins and stuff like that. When I was calling these stocks out, these type stocks out to do trade plans on them, I'm calling out things that are from a GPS perspective. When I say GPS, I'm just saying the location where it is on the chart. Um, we're sitting on top of protection. We're sitting on top of near the 200 cloud with an inverse arc and a reclaim. Even though this candle is sold off a little bit today, we have an inverse arc. We're at the retest of the 200 cloud. We just reclaim. When I say reclaim, that just means that the 12 cloud has now flipped blue, right? It has flipped to the blue color. And so that means you reclaimed it. So at first you lost the 12 and it was red and it was bearish, right? But now that it has flipped back to blue and you see the slope of the cloud is sloping back up, you've now reclaimed that 12 cloud. And the 12 cloud is our short term trend detection. So when you're looking at your clouds on the chart, these are our trend detection. So we're saying, okay, the long term trend is still bullish on Oklo, even though it went to all time highs and crashed back down. The on a 3 day time frame, it is still in an uptrend from the perspective of the long term trend is still sloped up, not aggressively sloped up, but it's not bending down. The 200 is still sloped up, kind of just chugging along. And then now you just recaptured the short term trend. Okay. So now we got those two things. So we know what the trend is on a 3 day time frame, right? And then when the WTMA comes down here, it lets you know that okay, we have some commitment to liquidity. So smart money has come in and tried to position themselves on Oklo. They got earnings. When is that? May, May 19th, a little bit away, right? And so when I try to teach you guys is to get your earnings position while they're cheap, you know what I'm saying? Do a trade plan and get a good entry on them while they're cheap and nobody's really looking at them, right? And so then if we go down to our daily chart on them, we can see that another inverse arc happened on the daily time frame. But look at the location is the important thing. Look, you pushing down. You have your inverse arc, and then you have your order blocks and stuff like that. Now you want to be so sometimes on a chart you're not going to see this order block sitting here. Sometimes you will just see a historical support lines or two lines or a really thick line when I say GPS location, sometimes you just will see just a level of support in that area where you're where price is at. You want to see evidence of buyers stepping in, like you see how we was dropping and dropping. A couple of things stand out to me about this drop. Like at first you're getting these drops and then you're dropping right. Then you start getting these big green candles right here, a nice size green candle, a nice size green candle. And then you get this other candle right here that has a decent wick on it. Then you open and close above your WTMA with a candle with the full body and wick right here, which is our arc candle. And then we get the lock candle here, right? And so a arc candle is just what we would normally call a floating candle, but for the WTMA, so that we can understand that we're talking about the candle belongs to the early entry confirmation system. This candle opened. This is the first candle to open and close. Well, I think this one is right here. This candle is the first candle to open and close without touching that lime green line, which lets you know that price is trying to slow down and reverse back up. And so you see that price is pushing down, and we got these green candles right here, and then we get back inside of the WTMA for early entry. Now, the reason why I said that sometimes you would just be bouncing at support is because the WTMA shows you that they're committed to liquidity and they're accumulating right here before these type of order blocks will let you know. So if we go back to this lock candle, you will see the intelligence of the WTMA um, and in full effect, right? So the chart is done loading. There's nothing here, right? There's nothing right here, but the previous week low. This is a liquidity level. This happens to be the previous week low and the previous month's low. So it came down to that level of support. You created this equal low, right? So you know it's liquidity sitting here. And then we get this lock candle, right? We get this inverse arc. It's confirmed. We hadn't reclaimed the 12 cloud yet. So then we get a strong candle right here. And then we end up reclaiming the 12 on that candle, right? But we still don't have an order block because we don't have a change of character yet. So price will have to push up a little bit more before you would even see a change of character. So what advantage does this give us? Now, the reason why when we enter into trades, a lot of times you will see people that's become very advanced with the wolf chart will be in these, these type of percentage trades that some people may get like once a year. And you will see, some people that's been using the wolf chart for a long time, or you will see coach, and we'll constantly be having these weird percentages that look like unreal, like we playing a video game. Well, it's because of when you start paying attention to these type of sweep sequences, like right here, I know that when you have these sweeps happening, and then when I say a sweep, price push down, you get this wick, and then you get the candle to close inside of the WTMA, and we get these type of reversals like that. It leads to these big moves. But I know that they're accumulating their position. Now, this was on April the 10th, right? So this is April the 10th. I'm not sure in the Discord when I called out this play. We'll go look in a second. But the reason why we can see this early is that other traders will have to wait until price comes back down to this and revisit this level. If you ever traded smart money before or traded like using smart money concepts or order blocks, you just taught that, what I'm saying, you let this happen first, you let this zone happen first, you let this whole move happen. But sometime in the future, price will eventually come back down to this level. That's when you enter in. We just happen to have something that can tell us where this is going to be at on the first time every time, basically. So it's going to come to these locations and give you that inverse arc, right? And so when you start thinking about the wolf chart, the way the confirmation is designed in phases, it just start opening your mind up to exactly what's happening. I know from trading for a while that smart money is only going to push. They're going to push price toward. They're going to push it toward where liquidity is supposed to be at, and then once they push the price to where liquidity is, then I know that this is what they have to do in order to get into a position, right? So for example, you see that we have this historical resistance right here on Oklo. We had this drop that pushed down. Now, once they start getting this area, uh, because I know that this zone has not been tested, when I look at this chart, I see something immediately and I have to wait on something. I already know what's going to happen. I know how this story is going to end. Even if price is just sitting back here, let me see. If price is sitting like in this range, right? When coach sees this setup right here, and you will see, hey, it's a buy side sweep going to happen here. It's a buy side sweep is going to happen right here, but they're going to drop. They're going to drop it back down after it comes to this spot. I already know just by when I see this setup as bullish as it looks with the inverse arc, I know that as soon as price gets above this level and especially above 115, my stop loss is going to be so tight because I know that they're just pushing it up because they want to sell this stock when it pushes up. I know they want to sell it because on their charts, what they see is right here at the top of this box up here. This is what they're going after, and then at the bottom of this box, this is what they're going after, and at the bottom of this box. So you see how we play. We know where their position is by these green zones, but they also see our money by these boxes under here. So on their charts, they can see, and then when they're looking at the order flow that we don't have access to, they see right here in this area, right here, they know that it's a bunch of retail traders, right? That are going to put their stop loss right here. So people that want to buy puts, it's going to be people that see these order blocks. They're going to say, hey, man, I'm going to buy some puts on Oklo. I'm going to jump in right here at this historical resistance line. And then and I know if they break above this level, because they don't know nothing about waiting on the opening close candle, full body and wick. Most retail traders don't trade like that. They trade if a candle break over the line, jump into the trade, and it'll reverse on, right? So so they know that they're going to buy their puts right here, right? They're going to buy their puts right here. The people that want to buy puts, and then they're going to set their stop loss right, literally right above on the other side of the resistant line. Because they're saying to themselves, "I'm gonna jump in right here. If price pushes past this level right here, then just stop me out because the trade is obviously going to break out, right?" And then even a trader like that, they'll see a break past this and they'll try to jump into calls and try to reverse into calls. They finna catch all that improper trading. They're going to take advantage of all that. There's another type of trader that they are breakout traders. So they're saying, I'm gonna put this type of order in a buy stop. They're gonna put on stop right here, and they're gonna say when price breaks above this resistance line, as soon as it break above, then I want to buy in right there, right? So I'm gonna buy in at this level. As soon as price break above that level, I want to buy. I'm gonna put my buy order in, right? And then they may set their stop loss like around this area, right? So they're just saying if price pushes up and it crosses past this resistance, hurry up and put me in the trade at a market order, and then I'm gonna ride this trade up, right? Now that's a lot of liquidity. So you got stop loss orders, you got people buying that's bearish, but if you break above here, they're just going to buy in right here, and then you got people buying a breakout. What that forms is a bunch of liquidity at this area. Smart money needs a buyer. So they need a buyer. So if they're trying to sell when they get up here, they need a bunch of people willing to buy Oklo at the price of between 115 and higher. They need somebody willing to buy what they're trying to sell because they're trying to dump out of it. So that's why you will see price come up, and I'll say, hey, it's going to be a buy side sweep, and they'll push price up. You see how they pushed it right above, and they made you think it was going to break out, and you see how they just so it's automatic. They dumped their bags out, but they had to get the price to an area to where somebody was willing to buy what they were selling, right? Now, on the opposite end, when you're buying calls, when they're trying to buy calls, they have to do the same thing, but to the downside, right? So you see how now I don't know if it's gonna keep going up, but you see how it keeps dipping into these pockets. You see how it popped in through here first. You see how I just put this box down here. I don't know where their orders are, but you see how they drew it up and then they grabbed a little bit more liquidity and they were able to push it up. They're gonna always play around in these ranges under your order blocks. And even down here, they will try to play liquidity under here before they can try to reverse something back up. They have to do this because if they're trying to buy calls, what do they have to make us do? They have to make us sell our position, right? So they need somebody willing to sell in order for them to push the price up, right? And so even though I didn't know, because I know what they have to do now, if I would just drug this box over and kept it in the same spot under where their order block was, look where they end up buying in at, right where they had to push price down, where everybody set their stop losses under this support level right here. They were trying to buy their calls. They have to push down and stop you out. So because that creates market orders. So when they push price down, you're telling them, okay, I'm in calls. I believe the price is gonna go up. However, if price comes down here, sell my contracts at the market price and just sell it. Now, if I'm trying to buy and I want to buy 1 million shares, each one of your option contracts is worth 100 shares apiece. Think about how many people got stop losses set down there, just retail. And even though you think there's not a lot of money, but if each contract is 100 shares of buying or selling, right? So when they push price down, if I want to buy 100,000 shares or 500,000 shares, I know how I can get somebody to sell me some shares. It's you guys. I can just push price down, force you to sell to me, and cause a little panic, force you to sell. You become my liquidity that I need to buy those contracts. And then I jump into the trade and we push up. So now that we know that's what their game is, they don't care about price action. They don't care about head and shoulders. They don't care about um, you know, they use the 200s and stuff like that as areas to know where liquidity is at, but they give us these things on Fox Business and blah 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 and say, hey, it's at the 200 or it's at the 100 moving average. What does that do to us psychologically? We use these as support, resistance, and so what? But what does that do for them? That creates millions of people willing to put stop losses and trust these areas, so they create liquidity pockets that they can utilize, right? So now that we know they just their game is pushing price to liquidity levels, and they're either going to be accumulating, they're going to be either compressing the price. So when we say consolidation, what they call this is compression. We're going to accumulate right here, right? And we got our position. We push price down. We're satisfied with what we're buying. We want to accumulate for a little bit longer to get as many shares as possible within this little discounted range. The WTMA comes in and say, okay, we see the sweep. We know that you in the position now. Now, are you committed? Okay, they've committed. So they're settled now. They're done with their compression. They're ready to expand the price. The ATR tracker flips on when they get into this expansion, when they're ready to start pushing it up with aggression and they're willing to pay. They're satisfied with their liquidity. They're ready to let it expand so they can get their payday. We got our money down here, and the WTMA say, okay, they committed. The 12 says, okay, the short term trend is established now. We're sloped up. The ATR tracker is going to let you know when they're really finna try to push this thing up and try to make their profits, right? So they're looking to make their profits now. The ATR tracker is built to say, okay, this stock right here, they're ready to get paid for Oklo. They're ready to get paid for Microsoft. And you will see these stocks that flip on like that be the ones that will be pushing up, you know what I'm saying? And they ready to get as much pay out of that accumulation in that expansion phase as possible. So when you look at the confirmation system, where I've built and also being trained by somebody that has been trained to trade like this, from just getting that knowledge, I built my entire confirmation system to stop us from getting trapped by them, to see when they're getting in position, and to avoid them, but trade with them in all of our confirmations. So that's why the location of your arcs and paying attention to, hey, did you see a sweep happen down in this range? When you see sweeps and stuff like that, they're so critical for your eyes to be able to start catching buy side sweeps and sell side sweeps. It's called a sell side because they need sell volume. They need sellers. It's called a buy side sweep when you're at the top in the red zones because they need buy volume. They need people willing to buy. So they got to push price up past this level to get people to say, oh my, Oklo is on steroids. It's finna go to the moon. It's finna go to $85. And you start getting all excited. And then meanwhile, in the background, they're just offloading their shares in their positions, right? And so same thing happens down here. So our early trend detection, I mean, our early phase is the WTMA. Our short term trend is the 12. And so we had this dynamic color change system to let us know visually, you know what I'm saying, to help you stop counter trend trading a little bit. Sometimes you can counter trend trade, but you want to have, you know what I'm saying, your ducks in a row. You want to see some things on your side, like losing the 12, right? Losing the 12 is red, and you got a bearish arc. And so that's letting you know, okay, this thing is in a downtrend, right? And so when you're in a downtrend like this, you know that the downtrend is strong, and so the moving average is going to with a cloud is going to act as a form of resistance and an area where they're going to sweep liquidity because they've built our brains to trust the 12 and trust these different moving averages. So they use it as also ways for sweeping liquidity. You see this wick, they pushed up, swept, and then they continue down. They pushed up, swept, continue down. So what I like to teach too about these type of entries when you're looking at your 12, you want to be when you're trying to buy puts, you don't want to be so far away unless you got in early. You don't want to be super far away from your moving average when you're getting into puts. You know what I'm saying? You kind of want to let it bear flag back into it and then reject and then drop. And you'll see that a lot more on the lower time frames. I'm gonna stop for a second, let you all ask some questions. I was just trying to teach a little before we got into just breaking down and doing like just a regular market analysis. But if y'all have some questions, you can go ahead and ask some. Let's see. Mm, what about Danny Mitchell? That smoke, smoke. What kind of questions you got, bro? And some of y'all might be just have me on at y'all jobs. And if y'all don't have questions, that's fine. That's fine. That's fine. Creole be making fun of me. Y'all call him Creole. I call him Q. Because he was like, everybody thinks you're so serious, man, but you be trolling me at work all day, which is
Hey,
true.
coach.
All
Hey,
day.
coach. I got a question.
Go ahead.
So, I know I understood what you said about like getting in where at the bottom when you see the order blocks. But what about like Dell, for instance? If it's running
Hmm.
and you're a little risk taker, you want to get in on the play like while it's running. When
Hmm.
is the best time to get in? When it's
So,
already, yeah.
so yeah, you always have to. So this opportunity, this opportunity, that opportunity, all this whole setup that you see right here is never not going to be available, right? And I say that again. You're either going to be reclaiming the 12 cloud, you're either going to be making fair value gaps, you're either going to be near a demand zone, you're either going to be breaking the trend line, but you got to think about it like this right here. You watching a movie. On the 1 hour time frame, this is like not slow motion, but this regular speed, right? Now, this right here, this what just happened right here with this trend line right here. So let's look at this 1 hour chart. We got a trend line here, we got a trend line here, and then we got this big breakout. This is just two trend lines. If I drop down to the 15-minute chart on Dell, you're gonna see the same type of formations, same stuff happening at these different locations, but it's gonna be uh more inverse arcs, more of the same thing happening, but just on a smaller time frame. So this is our location out here now. On that other time frame, we didn't have as many order blocks, right? But look how many we have now. We got another order block and an inverse arc. Or order block, look at this sweep with an inverse arc. Inverse arc. So we got all these different inverse arcs now. So now if I go down to the 3 minute chart, you're gonna see that same picture that you just saw, but now your entries are gonna be now how we were just looking at probably 2 weeks worth of data. This right here, this same formation happened today. You got three trend lines with the same exact type of formation, inverse arc, trend line break, inverse arc, trend line break, inverse arc, trend line break. You got the same confirmation happening multiple times today on Dell. They would have gave you the same exact type of entries because it's in such a strong uptrend. So you will never just because it happened on the 1 hour, it's about to happen again on the 5 minute, and it's about to happen again on the 15 minute, and it's about to happen again on the 1 minute and the 3 minute. You just have to drop down to the lower time frames. And like right here, you got the inverse arc, you got a strong bullish candle that broke through the trend line. You got the level three, which is, what I'm saying, it's above the 200, the 12, and the trend line without touching it. But you also got blessed with a fair value gap on this candle. So you push back into that and you were able to push higher. You see what I'm saying? So you just think about it. Don't think about it like, oh man, I missed. So this stock is taking off. I don't know how to play it. You're going to see how to play it when you drop down lower because it's just going to give you the same type of confirmations, right? And so what I like to do when I'm trying to enter into a play, if I looked at like today, we were looking at Meta today, and Meta had closed above a order block on a certain time frame. I forgot which one it was. I think it was the 5 minute or something. But in order for us to drop down to the 2 minute or the 1 minute to play the breakout, it would have had to open and close a candle above this box right here. Let me move the 12 cloud for a second.
I think you had
So
said it
we
was
were,
the 15 minutes, Sean.
was it the 15 for Meta?
From Meta, yes.
Yeah, okay. So we had closed above a level, and we were going to play it from the lower time frames. But when we went down to the lower time frames, that zone just proved to be too much. Meta never signaled the breakout because he would have had to open and close a candle above the top of this box right here, this confirmation candle. That was our trigger to get into the trade. But on the flip side, it broke under the box and showed us how weak it was. So this became a significant candle. Even if I didn't have nothing else on my chart but those supply zones, look how much price action on a lower time frame that this candle received after it was our trigger to the upside, but Meta kept trying to break it, but they kept using it to sweep liquidity. And they pushed down, they tried to break under it, it popped back up. Then they finally got an open and closed candle under it. It pushed down, retested it, could not get back even in the inside of the low of that candle, and just kept dropping, right? To the end of the day, right? So look, it came back over here. If I drug this box over, even for the rest of the trading day, it could not break above it, but it kept giving us bearish confirmations under the low. So when you find a significant candle on a higher time frame, the way that you enter with precision is you just isolate that candle so you can actually focus visually. You know what I'm saying? Because you ain't doing it but playing the high and the low. But if we pick any stock that had a good day today, right? So if we look at Microsoft, if we went back and looked at Microsoft's breakout candle or whatever candle it had on that time frame. If we were planning from the 15, we could just pick a time frame, right? And we went back to the start of the day, right? That's a strong candle to try to play, but we'll see what if it was a inverse arc or what kind of candle this was. But whenever you see a significant candle, you can play the candle. You know what I'm saying? You can play that candle. So this right here, look, you see how we got this inverse arc confirmed at 8:45, this candle. And so even though this isn't the ORB candle, the first candle of the day, this is the second one, right? I can still draw a box around this candle. This will keep me disciplined in seeing the high and low of this candle on any time frame under the 15 minute, right? So I can play it from the 15 minute if I want to wait on an open and close candle to play Microsoft, or I can drop down to the 5 minute or whatever time frame under that. It doesn't matter. And all I'm looking for is a candle to open and close above this level and respect this as support. So I want to see this get flipped into a support level. So you're either gonna wait on a break and retest, or you will set your stop under the low of this candle if you want to uh play this candle just from just rawly playing this candle. But if you look at the price action on this candle, so we'll play it. It got a fair value gap, and we just gonna pay attention to the interaction of the top of that zone. So we end up closing above it. Got the open and close candle here, right? Again, on the 5 minute chart. And I just want y'all to pay attention to how much price action and how well respected and how accurate the wolf chart is finding the actual, that's called a displacement candle. And so that's your star of the show type candle, right? It's gonna tell you the breakout candle that we need to respect, right? And so constantly the top of it, the high of that candle is getting tapped and respected by price, right? Until you have a breakout, right? So look at that. So now we just took a random lock candle, a random inverse arc candle on Microsoft, and look at what happened all day with the price on top of it. It just got sandwiched into this little range, but it's just playing the top of that candle and respecting it. Doesn't matter what stock you're trading. Uh, this is what I'm saying. And even if you do it, so let's try a level 3 candle. It's going to help you regardless because either you're going to break above it or it's going to break beneath that significant range of that candle. either way, you can prepare to play what the market give you, right? So if we look at SPY and we can just pick a confirmation, a solid confirmation, right? So let's play this. Let it load up right quick. And y'all can ask me some questions while we waiting on this to load if you got some. But I'm just trying to show you all how to execute, right?
So Sean, would you play that range or just kind of you're going to hanging out watching it?
No, in that so if the range, if the candle range is big enough, you can play the top and bottom of it if it gets back inside the candle. But the breakout, the actual breakout will happen with the breaking above it or beneath it.
Gotcha.
You see what I'm saying? If you play the inside of it, you got to be scalping. So that means you got to be quick, like in and out,
Yeah.
playing within that range. Now the breakout will happen. You know what I'm saying? What's this? Is 9:45. Hold on, let's go to a like a 30-minute chart to see what spot did. Now, if you play, say if you played an arc candle from, or I mean, a inverse arc from the 5 minute, if you're a person that played the 2 minute and the 1 minute, you can do the same thing. Um, you can do the same thing on that candle, right? Exit out, pull back. Yeah, I think this is our lock candle. So let's just put it on the lock candle. So, and then you also when you're studying, just pay attention to what I'm doing. I'm looking at these setups and then I'm doing, you know what I'm saying, going into replay because when you're looking at a chart after everything's finished, it doesn't really give you the type of training you need mentally to see, okay, what did the chart look like when this happened? And then you can play through and see how the chart actually behaves. You can do it. Another thing you can do is go into replay mode to a confirmation to build your trust with Black Wolf. And when you're building your trade plans, you can go to a weekly time frame, you can go to a 3-day time frame, go back to a lock candle, go back to a level 3 candle, do a full trade plan, a full Black Wolf trade plan, top down. I don't care how old the trade is, you can go back to whatever confirmation you want. When you put your chart in replay mode, it's gonna put every time frame in replay mode, right? So then you do a trade plan. Black Wolf don't know that it, you know what I'm saying, that this old, you know what I'm saying, it's an old chart. And you do the well, he know because of the date, but he gonna still do the trade plan as if it's today, right? And so you just do the trade plan and then you can play it out and see, okay, was it accurate? What my entry would have came in, right? You can evaluate, okay, if you say if you get a 2 hour candle close above this, you can lock that candle. You literally can go back and simulate real life trades with replay mode and trading view and get pinpoint accurate on your trade plans and how the chart behaves because with this replay mode you can go back and redo a full trade plan in the past and see if the trade plan is accurate or not, right? So take advantage of that. So now if I was looking at this 5 minute candle, if I took it to the 1 minute chart, same 5 minute, you know what I'm saying, lock candle, but we can just see the high and the low clearer, right? And you just be looking for confirmations under that or above it, right? So when I say confirmations, you want to see an open and close candle, or you want to see fresh inverse arcs. You can see where we're trying to get to. You know what I'm saying? So this is not a big, it's like a $1 move, right? But you can see where we can bounce at. You can also see if we close the 1 minute candle under the 708.73 level, you probably can come all the way down here. You got a high chance of sweeping this area because it's a swing order block. But let's just play it out, and so you can see kind of how the price action looks from the 1 minute. So you end up getting a breaker structure. You see how you're getting this activity, you sweeping that low of that candle. You finally get an open close candle under. You really close to your order block now. You need to close the candle under that. So we getting a little reaction from it. So you break under that level. And but you got so if I was playing puts after I lost my low of this range, push down here, type my stop loss at that or exited at that order block if I was scalping, I probably would just scalp this for $1 if I saw that order block there. And then you see how you're pushing through. Now this was a big move because it cleared out those order blocks, but you end up bouncing from that one, right? But what I'm trying to get you all to see is when you're isolating the confirmation candle, and you move to the lower time frames, this is nothing more than a high and low of that candle. But when you build a zone around it, it just mentally you can see kind of what your range is for a breakdown and a breakout, really similar to ORB, or ORB just means open range breakout, not order block, but just an open range breakout. You can get the high and low of that candle and visually see and become more accurate with your entries and stuff like that. Now, what I did want to show you guys is that you can do that same thing with when you reclaim the 12. If you're a more cautious trader and you want to say, okay, I just want to kind of wait until um, price gets back above the 12, right? So if I was going to like my 2 hour chart and you want to play like the 12 cloud, which is basically when a person likes to play the 12 cloud, they're basically the type of trader that's a little bit more cautious, which is nothing wrong with that. But they want to see let me go to something that don't have all this stuff on the chart. They want to see some proof of stability. You know what I'm saying? They want to recapture at least the short term trend, because you can get in a fight with your 12 cloud if your WTMA does an inverse arc and your 12 is still sloped down and is not in agreement. You can get into a fight with that 12 cloud, right? This thing got too many gaps in the chart. Let's see. Yeah, Tesla chart look a little bit better. So we'll and look and see Tesla on the 12 cloud. Now, so we got an inverse arc. We in this consolidation phase, right? Now, this candle reclaimed the 12, right? And that's a pretty nice size candle. And it's not a bullish candle. It's kind of mostly got sell pressure on it. But instead of me looking at this, now my GPS location is, grade A, right? I'm down here at these order blocks, right? So I'm at an order block. I got good location. All right. So now I say, okay, you know what? I really don't want to play this candle because I don't want to get rejected by the 12 cloud and have to wait before expansion happens. So I don't want to take the early entry. I want to kind of wait until this cloud flips back to blue. Now, I tell people all the time, you can make a lot of money only playing the 12 cloud. When you get two open and closed candles, consecutive candles without touching the 12 cloud, it is a very strong swing trade on multiple time frames, like 15 minute, 1 hour. When you get two, or especially on a 2 hour and above daily and stuff like that, if you get two consecutive uh, open and closed candles above your 12 cloud or under it, two consecutive candles under it, it is a really good swing trade, and it shows really really strong weakness, right? When you get that two clouds consecutively under it without touching it, it gives you really good swing trades. Like right here, you got two, and then we had a gap up. But so say we use that technique or just use the first candle, right? Uh, you would grab the high and low of your 12, right? And we're not even looking at the arc counter right now, or we're not looking at the level 3. We just playing, okay, we've recaptured the short term trend. We got good location on it. We already got, what I'm saying, back inside of the WTMA, we got an inverse arc. We're just going to play this level 2. That we're in the second phase of the early entry where we've recaptured the trend, right? We know that they got their position. We know that we're near where they accumulate at. And so we have this 12. And so now you can drop down to the 15 minute. And if you want to take your time on the 15 minute playing this one, then you can just play it. You got your open and close candle above it, and it happens to be what, a level 3 breakout, right? So your range. It end up being a swing high on the 15-minute chart when we was looking at a reclaim candle on the 2 hour. On the 15, it ends up being a very nice looking breakout, right? So you got your 12 sloped up, you got your 200 cloud reclaim, you got a level 3, and so you have a clear entry. But now you know that, okay, this is representing my 12 reclaiming on the 2 hour, so I got a solid trade, right? And then you get this rejection. So this is one trade right here, right? So if I get in this trade is over right here. I got to take something off the table, right? In like a $10 move, I got to take something off the table right here at my resistance level. The way I choose my strike price is whatever my first level of resistance is, whatever my first target in my trade plan is, my strike price is always going to be equal to or lower than my my take profit target one. And that's another way that I will get 50, 30, 100, 200% wins is because I will look at, saying the location, how the VRVP looks, if it's open. But more importantly, my target is always going to be, my strike price is never going to be above my my first target, right? And so I try to stick with that that logic because by the time you hit this target, so these contracts, if you bought these contracts on a breakout, this is pretty far out of the money. But if I would have bought with this strike, these are like 200 percenters or like 150% type contracts by the time they push up here, right? Now, this is one trade. Now you got an inverse arc, and then you got a break of structure, and then you enter into another trade, and you're getting all these fair value gaps. So then, if you was on a 15-minute and say you didn't feel comfortable, Tesla was running aggressive, you do the same thing all over again. You can still take this counter right here. Say somebody said, "Man, I'm in Tesla running," and you go look at it like, "Oh man, it look bullish. It's pulling back." What did I do? You know what I'm saying? You just draw another box around these momentum counters, especially if it leaves a fair value gap. And then this will even help you because once it gets the fair value gap, what is it going to do next immediately? It's going to pull back into the fair value gap. Just like right here, this kind of pushed up. It had a strong fair value gap. What does the next candle do? It pulled back into it. You already know that this candle is going to pull back for a period of time. And so you want to come back, if we want to look at this and just look at that fair value gap candle. So we get this candle, and then you can still drop down to the 5-minute or the 3-minute. And it's just you're just gonna have another picture of it, right? Same trade. Now you can see right here, it looks really good, right? You got a extra level 3. You came down and you pretty much swept liquidity on this order block. You just gave yourself a clean level 3 breakout. So if it keeps breaking, and then you're printing fair value gaps on the 5-minute. So then the entry just looks more realistic, easier to attain. You know that when you break above this, you're breaking above the high of that candle that was important on that 2 hour, the 15-minute, and you just play it out. You got an open and close candle above it. That's your entry. And you know what I'm saying, you can just play it, play it up. And so you just don't want to be too like gun shy. Just when you get your confirmations, as long as you got risk management, you just got to control what you control. You got to control what you can control while trading. So when you're trading, what can you control? You can control if you buy something or not, right? You can control how much you're willing to risk. And when I say risk, I mean, I don't care if I jump into a trade with $15,000, right? If my risk is 1% of my portfolio or 2% of my portfolio, like when I hit negative 650 on that trade, if I jumped in it with $20,000, if I need to get out, if I can only risk 2,500, if I can only risk $2,000, that's just what my risk is per trade. So you can do it that way, or you can, like, I love to use the ATR so that I don't get stopped out of trades and I'll slide my stop loss up. But as long as you know your risk, then you control that, then it's really nothing to even think about. You know what I'm saying? Like when you get an entry, when you get a trade, you get a breakout, get in the trade, control your risk. If you get stopped out, you get stopped out. If you hit the take profit targets, don't be greedy. Don't try to recover your whole account in that trade. And that's what happens. You'll get in the trade and you try to squeeze every drop of juice out of it. And sometimes you can do that if you slide your stop loss up and you being patient and you letting it come up. But don't try to make a home run out of every single trade, right? Don't try to hold stuff for like so long. And the other thing you don't want to do is when you are having a lot of open positions, if you ever look to your sideline and you don't have any buying power, say somebody say, "Hey, this stock about to break out," and you say, "Man, I don't have no buying power." I'm not talking about people with a cash account. I'm talking about you literally don't have buying power. You're over trading. Okay, that's the biggest red flag that I can give you. If you look to the sidelines and you don't have any buying power and all your money is in options, you don't have no shares, then what's going to happen is that you're going to be in a hamster wheel. If you're a good trader, you're going to be in a hamster wheel. You're going to have big, nice wins with great percents, and then you're gonna look up at the end of the month and you're gonna be at break even or down, right? So you're gonna have a bunch of winners, but you're gonna have your losers are gonna be just as big because you're trying to manage, you know, 13 trades, right? So you don't want to do that. So you want to be disciplined and not have so many things open up and have some buying power to take advantage of opportunities. Does anybody else have any questions?
Sean, I was asking when you said you use the ATR to manage your risk. What's
Hmm.
the formula that you use for doing that?
So on the ATR tracker, I guess in we. So do you all have Webull at all?
Yes, I do, and I see where you have, I see what the ATR is. So
Hmm.
yeah, I have Weeble. I'm just wondering what is it that you do to
So
manage?
so so my so mine so I use my ATR at 1.5 to ATR for stop losses. Not on the higher, like when I'm on like stuff on the smaller time frames. On the higher time frames, I use 1.25, and it's within inside of this. If you had a new ATR, if you have the latest wolf chart, like I think the older wolves still have this one I'm looking at. Let me see, option delta. I use the 1 point. So right here, you see how I'm changing my ATR multiplier right here. So this one right here is on 1.2 because this just sets you slightly outside of the ATR. But you use your delta, saying your delta on your contracts and your Greeks, and you say, okay, if your delta is a certain amount, you got to subtract that from what your stop price is. So for example, let me pull up because I do it inside of my wolf chart. Let me see. I always put the wrong version of it on here. Does anybody have that latest one on their chart? So I can try to show you. I think it's in.
Thanks so much for this because that's one of the things I need most to understand where to set my prices.
Hold on, give me a second. You will know if you got that version I'm talking about because the ATR font is bigger on it. So I'm trying to find.
Are you referring to the Wolf Trend Hunter?
No, not the Wolf
No, not
Trend
the Wolf
Hunter. It's
Trend.
Yeah, I just actually found that the chart that you have there to the right. I
mm-hmm.
just found that and started adding it because
Oh, so
somehow
man, wrong
everything
spot.
didn't always seem to be there.
Mm-hmm.
But yeah, I do have that. So you say you subtract delta from the
Yeah,
ATR?
yeah. I'm finna show you right quick.
Okay. Because I decided to play VIX today. I've never done VIX before, but after I was watching CNBC and they made mention of, I think it was Trump who was saying it, or it was someone in government that the TSA employees may not be getting paid in a few weeks to come. I don't know. They didn't give a reason why. Obviously not enough money, but they didn't go into any specifics. So I thought, ooh, that can't be good. So I decided, okay, let me go to the VIX. Where is it right now? And I think it's gonna shoot up because it's gonna be, people are gonna be upset, and SPY is probably going to spiral. And so I see it's been moving overnight, which is almost scary to me because I'm not accustomed to things happening like that. But I'm just curious as to what I should be looking for when I'm looking at the rates.
Yeah, so here, I don't know why this thing doesn't pop up. All right, so this, if you all had this wolf chart that has when I integrated the like FX and futures and all these different things inside of the ATR multiplier. So your stop loss, you got to adjust this down. So you can adjust that to 2.5, right? But so if I'm getting into a call and I give my, so you can put in all your, so on your on your chart. So if you go into your ATR, your wolf chart settings, if you have this one, I'm gonna upgrade everybody's to have this. All you have to do, because it's gonna look at the stock price and your ATR, the actual stock price ATR. If you put in all your Greeks right here and your contract value, whatever you pay for your contract, then it'll give you the option contract stop loss equivalent to the stock price. So all you have to do is come in here and put in all your. So the main thing is this right here. This is what's gonna make your stop loss wide or small. So if you wanted a smaller, a tighter stop loss, you can say, okay, I just want to do my stop loss at 0.5, right? You can set it. I mean, let me walk it down. Hold on. So 0.50 or zero point 0.1. So you can go like to 0.5 here, right? And that'll give you a tighter AT. So basically, the ATR is how much the stock can move on like how many dollars it can move within that time frame. So if the ATR on a daily time frame is $5 for example, if I put my ATR at zero point 0.5, that means I only want my stop loss to be at $2.50. So if this stock can move $5 on a day, if it moves down $2.50, I'm gonna let it stop me out. Like I'll let myself get stopped out in a trade. So it's going to use that ATR. So the reason why you want to use the ATR is that when hedge funds and other like professional traders in their algorithms, they know that the price is going to move within a certain range. They already scale for that. If your stop loss is like too tight, the normal volatility of the stock would keep stopping you out. So even though you might be trying to be safe in trading, you will find yourself constantly getting stopped out. So those little $50 and $100 losses are just going to keep adding up and chipping away, and you're going to get stopped out, and then price is going to push up. When you put your stop loss slightly outside of the normal trading range of a candle, when you put your stop loss on, you have a higher chance of letting price just do what it naturally does. If it drops a little bit and then goes up until you hit your destination, it'll stop you out. But on this one right here, all you have to do is just put your option entry price, the option information inside of here about your contract and stuff like that, and then hit OK, and it'll put your stop loss onto this dashboard over there. This dashboard that I'm putting up right here. So it'll put it all in here. Hold on, is this the right one? Yes. So dashboard elite. Maybe does anybody have this upgraded version right here? I thought I had sent this update
It
out.
looks like the one that I have.
Okay. Yeah, I don't know
Dude, you
why.
were so gifted. I know I said every time, but God continue to bless you. This is amazing. Thank you.
Oh, no problem.
Hey, how can we get that one, Sean, if we don't have it already?
I'll be sending this out, so I'm gonna try to get it updated by next week for everybody. I gave it to a lot of the newer people probably about a month ago, and I was just trying to make sure it didn't have any issues on the main chart. So I just didn't do everybody at the same time just to make sure it didn't have any issues. But I'm gonna send an update out so that everybody can put this in when they're trying to do their stop losses.
All right, cool.
And if you all have any people that do have it, if you have any issues, I know I had put when I first built it for you all to test it out, but we had a lot of other stuff going on, but just test it out and then give me some feedback, and then we'll send an update out to everybody. Okay. But it's been working fine for me on when I try to put my calculations in there and stuff. But I also do a lot of things on Webull too.
Will do. Thank you so much.
Okay. All right, so guys, in the morning, just be checking in my trade plans. I'm gonna send you all a recording of this training. It turned into a training more than like a top down, but I do still have to go and pick some more stocks that I'm looking at since we keep on getting taco trades from Trump. I got some stocks I'm looking at. They're gonna be the ones that are, really healthy breaking out. And I'm gonna put that list in my trade plans. But I'm gonna go ahead and give you all your time back. I'm gonna send this. I'm gonna put this recording on YouTube so you all can check it out as much as you all like. But I appreciate everybody joining on. And if you have any questions, just reach out to me in the Discord. Okay.
Thanks,
Thanks,
Kurt.
man.
Thank
You're
you a lot.
awesome,
Thank
man.
you, Sean.
Appreciate it. Appreciate it.
You are the man.
Thank you, Sean.
Thanks, Lou.
You little
Who look cute?
Boy, why I wish I would have started that young.
I know, right? Thank you so much.
Yeah,
All
thanks. Have a good night.
You too.
All right, bye.
Bye bye.